Good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there. Just let me know that you can indeed hear me and see my screen. Hope everybody's having a fantastic morning so far. Hopefully your trading's been going well. We had a fun trade last night, and I'm looking forward to another awesome bankers close this morning. So without further ado, let's get into this. As always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. Lastly, I'm not a financial advisor. If you are seeking financial advice, please seek out a registered financial advisor. All right, guys. So news this morning. So the big elephant in the room is CPI, right? So we're down 0.2%, which is less than expected, which is good technically for inflation, right? Because we were at 7.7%. In the United States, we were projecting 7.3, which was the drop, but we dropped all the way to 7.1. And again, I'm not here to argue the metrics on this. I'm sure we could talk all day about that, but that's the number they came up with. So that subsequently caused the dollar to go down, because now that makes the dollar technically stronger without raising rates. It's just naturally coming down. Well, I guess they raised rates, and so that caused the dollar to ultimately, I guess what I'm saying is it's working. They're raising rates, and so far it's working. And so that caused the dollar to drop today. Anyway, so other news. Okay, before we get into that, other news, there was a 4 a.m. there was a Bank of England speaker, not too big of a deal. Got some Aussie news later, but nothing else. So we should be clear really to trade whichever pair we want to trade today. I've been looking at right here. So I've got the euro pound pulled up. Let me pull up my 5-minute chart. Let me get these Bollinger Bands thrown on here. Yeah, it's hitting up in a Bollinger Band on there. It's a little bit of a ways until you hit a sell block, and so I'm gonna see if what other options we have here. This guy hit a buy block not too long ago, but the next sell block is a ways away, and so I'm a little bit. I don't know if I would like to short the Euro Franc just yet, because there is kind of a ways to go on this guy. So be a little bit cautious on that one. Let's check the pound franc. Same thing. Yeah, like there's buy blocks down here that were pretty good. These kind of triggered, like you can see the market tapped into these zones not too long ago. Like this was only, what is that, 30 minutes ago, 45 minutes ago, the market tapped into that, which that would have been great to get into, but that's not the banker's close setup, right? There is a little bit of a zone up here that might be worth tapping into, but again, like this market has to go 22 pips to even get there. So I don't know if that's the greatest trade to take yet. So I'm willing to either wait for the most ideal setup, which I think is a good idea, or we can just see if there's anything else that's lining up. Give me a second here to kind of scan through some of these other pairs that have some relationship to what we're trading. Here's this CAD franc. This isn't a prime example. This morning it tapped into a little area right here, tapped into this, and then shot up right there. And all of this is repercussions from that CPI data. I know this isn't related to the dollar, but it was such a big news event, and the anticipation was so high that it did ripple out through several other currencies and currency pairs. Like this guy right here, this CAD yen has come down quite far. I wouldn't be interested in this one because it actually broke that low. And so even though it tapped into here, it didn't really like bounce off of it. So I'd be afraid of the CAD yen. I'd probably stay away from that one. Franc yen. Could this be an opportunity? We're kind of tapping into an area, or did recently get into an area right there. Might be worth looking at. I've actually got a trade on this pound yen Um, not a banker's close. Well, I guess it technically is a banker's close at this point, but I've been buying the pound yen here. I'll show you this trade. So, and let me get rid of all my pending orders because I don't need these anymore. So I'm buying the pound yen right now, and I'll show you why, even though it dropped a ton this morning. So basically, if you look at this, you'll see that on this 5-minute chart, this is like a structure point right here. Like this is a resistance area. I know you can't really see it very well in here because I got so many orders on. So why don't I show you it right here on TradingView. So there's actually two structure points. This is a structure point right here because that's resistance. The market broke that, and the market broke another structure point right here. And this is back on Monday. And then, so we're looking at the thing that caused it. So whatever this is right here kind of caused the breakout of this structure point. And same thing like with this guy right here that broke out. So those are technically both order blocks right there. And we're basically right in those right now. And so I've been buying this morning. We're in the second block. So I feel like we're getting pretty close to the bottom. Like if this wanted to keep going down, I'm not sure how far that would go. I have a hunch on how far it would go. I don't think it would drop much lower than that purple box here, because we are at a supply demand area. Specifically, if you really want to hone in on it, I would say like this to this really is just the box right here, because this was literally the last thing that happened. This little area was the last consolidation right before this massive breakout. And so that's why I feel comfortable saying like, hey, that's probably where most of the demand is going to come from. And sure enough, like that's where the market stopped, at least for now. Does that mean it's just going to go up? No, that's what I'm hoping. That's what I'm working on. But if this market wanted to, it could absolutely, bust through this and continue on it to the downside. And so far, there are some reasons why that could happen. So I may actually hop out of this trade, because when you look at these candlesticks here, every time the market goes up, what happens to the wicks? You get these really tall wicks, right? What's that a signal of? Like if you see a bunch of those, especially in a row, like we're seeing here, um, that's a sign that the market's not accepting those prices. Like whenever the market comes up to there, somebody is more than willing to send it right back down, right? So the market can't even hold its own weight. And so I do have some concern about hanging on to a long position here, even though, like I said, I do have some longs. And initially it's because I came into a really nice demand zone, but the fact that the market isn't just rejecting off of this demand zone is a little bit of a worry. It is a little bit of a worry for me. So I may just cancel this trade. I honestly should. I hate to do it, but we got to trade right. We got to trade well. You know what I mean? So I'm going to go ahead and cancel this one. And again, this isn't a trade that we took together. I'm just showing you like it's a trade I took on my own, but I'm not liking the way this is looking right here. Even though we're in a nice demand area, and who knows, this market could definitely go up from here, but it's not giving me the signals that you'd want to see. So initially, just in recap on this guy, why did I buy this? Oh, it's because it came into a really nice demand area, right? Really nice demand area right here that subsequently broke structure in the past. So I felt like this was a good buy. And who knows, still could be, that happens. But the fact that we're not just bouncing off of this demand area, the market's not just coming in here and then going up, that's something to pay attention to, right? Real demand areas, you're going to see the market come into here and then just go up. And it actually initially did. You can see this wick on the news this morning, the CPI news. The market actually came into here, and immediately within a minute, just rejected 50 pips off of that. That's what you want to see. But now that we came back into it, it's now making home in this area. And you don't want the markets to make homes inside demand. You don't want them to make homes inside of supply, because if that's the case, then a continuation of whichever direction the market's going to go is probably most likely. And since when we trade supply and demand, we're looking for reversals. Since we're looking for reversals when we're trading supply and demand, this is not, I would say this is not an ideal reversal setup. And again, the market has a mind of its own, like it can go up from here. But I would say in all likelihood at this point, there's more of a case for the market to go down. Now, should I just go ahead and flip directions and sell now? I don't even know if I should do that. Like, this is really a no trade zone, like, because you have things telling you that it's going to keep going down, but then you still have the fact that you are in a demand area. So, we talked yesterday about stacking probabilities in your favor, stacking trades in your direction. And so I like to take pretty much everything I know. And if everything I know is in my favor, then I know I can stack into that trade and go pretty big. But this one, I could really make the argument for either direction, and that's not a good thing. So anyway, that's why I'm going to stay out of that one. Let's look around. Let's go back to, well, let me look at a few other pairs here to see if we can find a solid banker's close setup. This guy wasn't as affected by the news this morning. You can see it did. I mean, it was obviously a huge candle right there. But I'm still looking for, anything dollar though, stay away from. I'm not going to touch the dollar right now. It's so, I mean, I don't know what you would expect at this point with the dollar. It could go any way it wants to at this point. Here's a dollar yen. Yeah, that thing is gone. That fell apart with that news this morning. And for those that walked in late, the news this morning was the CPI, so that's inflation data, and it was highly anticipated for the dollar because we wanted to see if these interest rate hikes are working, and so far it looks like we are seeing some improvement in terms of inflation. So that's a good sign for the markets. It's overall, that's a good sign for interest rates, because now, even though the Fed still may continue to raise rates a little bit, what they've so far been working on for the last 8-9 months in raising these rates is starting to show some moderate improvement. Okay. Are we out of the woods? No. And will there be repercussions for raising these rates? Yes. And we're already seeing them, and we'll continue to see them. Anyway, I need to find some good trades here. I'm just talking about the fundamentals, and it's really important to know those fundamentals because the market's so connected to that. Anyway, so Euro franc is a trade I really want to take, but I really love this pair, especially because there is not a lot of news associated with it. We're just not in a good area. Like, we're just not in a good area to buy or sell at right now. Like, you really do want to see the market, maybe coming up into, say, this right here. Yeah, even this would be fine. If it got up into there, I think I would start a sell. If it came back into here, yeah, I would probably execute a buy. But it's just kind of in the middle of no man's land right here. There's so many currencies like that right now. So this is a little tough, to work with. Let's see, let me look at this euro pound here. If anything, I might buy a small position on the euro pound. The reason why I might take a small position here is because, yeah, this market actually, let's see, did it pierce this low here? It basically came right to it. I was just curious to see if the market broke that. It's really holding its weight right here at this support level. So I don't think we'd break that at this point today. So if anything, I'd look to buy and maybe ride this to the next supply area, which would be up here. So I might do that. I'm just going to take a small position. That's the only trade I really kind of like this morning. If anything, there's not a lot that I like at the moment. But But yeah, I think I would execute a few buys here and then add to them as we move. Let me get my default stop and target in here. And again, the reason why I'm executing a buy is because here, let me get just a few more trades in here that I can work with. Okay. Reason why I like the buy is because you've got, again, there's no news on this pair for the rest of the day. This was hardly affected by CPI, which is good. Like the fact that this thing didn't really, it didn't see any type of effect from it. That's a good thing. This is a pretty solid supply demand area right here. And the market basically bounced off of that. And the next supply area is not until technically this is not like this is really the next area where the market probably could reverse. And so if anything, I think I can ride up until that point, which is not a ton, but yeah, sure, we could make 10 pips, 11 pips, 12 pips on these trades if we can get back up to there. So that's going to be kind of my target on these. Let me go ahead and pull these in. So I think we can get up to there. Somewhere up in here. And then the other reason why I like this is if the trade goes against me, it won't go too far against us before we get a lot of help. Like we will get help from the market. There will be willing buyers down in these. Like we'll get help again, in like this area right here too, just on a shorter term. Like we'll get help in there, and we'll definitely get help on this little area right here. So that's why I'm feeling like, okay, let's buy this, because if this thing's going to go up, it has until here to go. We still have some more room to go. And if it comes down, we're going to get help. So that's why I'm willing to do this. Okay, and I got all my targets in. That looks good. Yeah, and we'll try to make, 10 to 12 pips on each trade here and let that go. Yeah, like I said, if you look at the alternatives are a little bit scary. Like I guess the pound franc, you could do the same thing. Like you could technically buy this guy, and you could trade this one, and then you'd have to wait until basically this area. You could clock out of your trades here. You could take your profits right there. That's not a terrible area. And in terms of help, like if you took a buy, you'd get a little bit of help right here. And where's the next area where you get a lot of help? You would definitely see some help right here. But how far away is that? So like if the market came down, you've got help in 13 pips, some help, and then some real help is 30 pips away. And so that's the range is a little bigger. Like you have a lot more room to fall if it does want to fall back on you before you'd get help. And then with the euro pound, conversely though, right? Like if this thing falls back, we're going to get help in 5 to 7 pips. And there's a lot more help down here, 14 pips away. And that drawdown is much smaller. And so anyway, that's why I'm feeling good about this one in terms of maybe it won't be successful right away, but at the very least, we're going to get the ability to fix the trade if it does turn against us. Yeah. Let's see. I think that's good. And then with the euro franc, I was going to show you. So we trade pretty much 3 pairs when we're trading the banker's close. For those that don't know, we trade the euro franc, we trade the euro pound, and we trade the pound franc, because those are the only 3 currency pairs in this market that are only European, right? Like you've got crossovers, like you've got the pound dollar, but then you've got the pound and then you got the dollar connected, and those aren't, but that's not a pure European crossover. Like, and then you got, say the euro against the yen. Again, you're connecting two different continents there. And it's not necessarily a bad thing, but when we're trading the London bankers close, because again, the London banks close in 40 minutes. We want to trade something that's likely to trigger and close out based off of London's activity and the things that are happening over there. So yeah, with this one, again, the best trade would have been about 45 minutes ago or an hour ago, but it wasn't necessarily a banker's close trade setup. Like I said, this thing just tapped into a wonderful level of let's see, you can't really see it on this time frame. I wonder if you can see it on a 1 minute. There, yeah, I guess right here technically. There's a little bit, there's this thing right here, but I thought there was something else that caused that. Anyway, I'll take a closer look. Okay, it looks like our euro pound trade's moving in our favor just a little bit. I'm up 25 pips here, about 3 or 4 pips each. So we're almost halfway to our targets. This is good. This is good. Yeah, we'll see if that continues. And it should hit that, because the next area where you would find problems is exactly where our targets are. So like that's probably a natural area to close the trade, is right there. Natural area to get out. Right there. And then while we're waiting for this to cook a little bit, let's go to, I sent out a trade last night that was pretty dang awesome. Actually, hang on, this is getting pretty close to its target here. We are like inches away from hitting that. That's fun. It's going to be another good day. Almost every day is a good day. Okay, we just hit target one. We just hit one target, so we just booked some profit. Let's see if we can hit a few more here. This is a pretty gnarly candlestick. Hit two targets, just hit another one. 3. Just hit 3. 4. Come on, keep going. 5. Let's get another one here. Let's get another one. Come on. 6. Okay, this one is our last trade. So should we go a little more on this guy? Should we push him? Or maybe we'll just grab it and go. Come on, you can do it. We got one more to go here. Come on, let's hit it. Anyway, maybe if I like look away, it'll hit. So I'm gonna let that guy go, let it sit there for a second. But I wanted to show you this trade from last night that I sent out on the Aussie Kiwi. That was pretty awesome. So this was kind of based on a 15-minute chart, but I was pretty stoked about this trade, to be honest. So I found last night, I have this app on my phone. Oh, we just hit our last target. Heck yeah, we're already done. That was sweet. Okay, now the question is, okay, I'm gonna come back to this. Sorry, guys. Should we consider selling now that we're in a supply area? Maybe. Now that we're in a supply area, I'm thinking about it. Give me a second. Let me do some more analysis here. The reason why I like the buy so much was because you have so much pumped up demand down here, like an insane amount of demand. And so that's why I felt so good about the buy. So the question is, where do I feel comfortable selling? It's hard to say, especially with this candlestick. That's pretty convincing. I know for sure I would look to sell if the market got back up into this supply area. Absolutely. 100% I'd sell right there. Why would I sell right there? And it could get there. It could get there. I mean, with the way this thing is pushing, it could get there, right? But that area I know I would be willing to sell at. Because let's talk about why. Why would I be willing to sell there? Again, you got to find structure, right? So here's structure. Very obvious structure level over here. Let's talk about this. So if you come over here, this is a very obvious support, 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 and support, right? That's structure. So the market broke out of it right here, like big time. What caused it is the question we should all be asking. So whatever happened right here. So if you really wanted to break this down, it's really kind of like this area right here. Or even if you want to go break it down even further, it's really this thing. Whatever this thing is what caused this ultimate banker's decision to go down like this 60 pips, right? So yeah, if this market got up to that, I'd sell. I definitely would sell. That's worth it. And then where else do you have some pretty good levels? You know, you have some good levels, right? I would say right here too. That one didn't break as much structure though, so I don't know if I like it as much, but yeah, it's hard to say because, you know, that's the whole point of these is to find structure and then go where that is. I might come back to that one. But yeah, so this is probably the next area where you're going to find some market help right here. So I'm actually willing to place a couple of sells there, and I can go ahead and do that just as pending orders while we go talk about the other trade. But yeah, this is pretty much it right here. So yeah, I'll place a couple of sells right there. I'll put a couple of sell limits in here, just to, you know, just in case we can grab another trade today. This is really where I'd be willing to tango with this market. Something like this. Yeah, that's good. Okay, great. So I'll let that one sit there. But now we're kind of in no man's land, right? Like, do we want to buy here? Do we want to sell here? You could argue that there's a little bit of some supply here, but I don't know how solid that is. It looks like it's been tapped into a couple of times. So, you know, the more it's been tapped into, it's not as good anymore. So, but the market largely has not tapped into this one, largely. And it's a very significant and obvious level, right? Like this is such obvious support right here across this area. And this is an obvious mechanism that caused a breakout. So we know that there's supply right here. We just know there is, like, there's 100% there's supply there. So yeah, that's where I'd be willing to sell next. So now we're just kind of waiting. Like I wouldn't buy this. I wouldn't sell this at this point. You know, obviously we made our money on the buy. Looks like we could have gone a little bit more, but that's okay. I'm still very content with it. Okay, so now let me show you the other trade. So this trade we took last night, this was a fun one. I have this app on my phone that I've been using more recently. Something I've been doing as part of my routine in the afternoons when the market's kind of slower is I'll go in on TradingView and I'll mark up all the different supply demand zones that are pretty dang obvious, right? And after I mark those up, I'll go set an alert in my phone here. I have this app and I can literally say, okay, alert me when price hits this level on this pair. And it's a real quick thing. It'll even send me a message and it'll text this to me. And so I think I've spent $5 for their premium version on this app. And it's like a one-time like $5, which is that's obviously worth it. Um, and it'll give you pretty much all the pairs you want. It'll even give you exotics like things like the Indian rupee, the Mexican peso, and stuff like that, which we don't trade. But if you wanted those, you certainly could have those. And so I get alerted here. So my phone was buzzing like crazy at 6:30 this morning when that CPI data was released. I guess it's 8:30 Eastern for those of you on the East Coast. My phone was just buzzing off the hook. But and that's fine. But last night I had one alert go off on this pair right here, this Aussie Kiwi. And I had my alert pretty much set up, well, obviously where demand is. And so how did I kind of analyze this? So on a 15-minute chart, I was looking at this and I said, okay, this was definitely a lot of structure back here. There's several levels. Like you could definitely argue that this is a structure point right here. You've got some resistance there, you got some old support. Oh yeah, oh yeah, definitely. I see why I did this. Yeah, so that right there, technically these came pretty close to it. Like I felt like, okay, that's a structure point. Okay, what caused the market to break out of this? Well, I said, okay, whatever happened right here caused the market to break out of that. So I said, okay, great. Let's pull this over. Let's set an alert there and let's pull this over. And if the market ever comes back in this area, let's be a buyer. And sure enough, look at this. The market barely tapped into there. I got an alert that the market tapped into there yesterday. And I immediately just executed several buy orders, just immediately, just boom, 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 just executed my positions. And then I texted you guys just saying, hey, looky loo, look, here we are, we're at this level. Let's go ahead and get in. So it was a quick trade. I'm changing the way I'm doing this a little bit. Like, I would rather be alerted when this happens than just simply placing the buy limit or sell limit there, although you can trade it that way. I've been burned several times if you just place limit orders and just leave them there because of news events. So things like last night, I didn't have any limit orders on last night because I was like, okay, yeah, this news event is going to be pretty big and it's going to affect a lot of currency pairs. So I don't know if I want to have any limit orders in. So I'd rather just be alerted. And then if I'm alerted and I'm at the computer, I can go ahead and just capture what's available. And that's exactly what happened last night because there was no news that caused this. It was just natural price action. So when natural price action causes the market to move to supply and demand, the chance of your trade being successful is so likely. But if the market moves to supply and demand on a news event, fundamentals, it can and it may not, it may or may not work. Let's just put it that way. Like, sometimes fundamentals, so let's put it this way, macroeconomic variables will trump any type of candlestick pattern, any type of technical thing that you've been aware of. Like if you've learned a pattern that you like to trade, or if you find a supply demand zone that you're like, wow, this is a good one, throw that stuff all out the window if there's a news event that merits that move, right? Now, often you will see news events stop and go at supply demand zones. We saw that today on several different pairs, but it's not a guarantee, and you can get a lot of trouble with it. So I would much rather play and trade supply and demand when the market just naturally goes there on pure price action. So that's how this one was last night. There was no news on the Aussie. There was no news on the Kiwi. And so the market just tapped into here. I double checked to make sure the coast was clear. It was. And so I was like, let's go. Let's go. Right. Once you have that green light. And yeah, it was absolutely perfect. Just perfect. We have a nice structure level, nice little consolidation prior to the breakout that caused this. That's 100%. That's a demand area. 100% that's demand. And sure enough, the market just barely tapped into demand and then went up from there. So, so that was a good trade. I was really happy with it. And then actually, fun fact, I can plot my trades so you can see where I bought in and where I got out. I did leave a couple of trades to ride last night, which I've closed this morning. They should just populate here any second. Here they are. Boom. So yeah, most of my trades I was able to get, I got out of, you can see I got out of a bunch of trades down here pretty quick. I made my money and I pretty much got out on this guy. Wow, I did go pretty hard on this. Like I had a bunch of trades. Let's see, yeah, that's it. And then I just had, I think two orders that I let ride. And obviously, sure, it would have paid off to hang on a little longer. Like you can see, I probably could have held on longer, but I'm not complaining. It was a great trade. I'm happy with it. So I think we should just be a little cautious with supply and demand when there's a macroeconomic variable pushing the market like this morning. Let's actually see. I'm curious. How did that pound yen do? Yep, it went down. I knew it. I'm so glad I got out of that trade. I was like, I do not like these candlesticks. I don't like, it's hard because you have to like punch yourself. You have to pinch yourself and be like, take the loss. Like you have to have that discipline to be like, you got to take this. It's not looking good. It does not have what you're looking for. And it's hard because it did have what you were looking for in the first place. You were thinking, oh, this has what I like, I'm just going to get into this. But then as the trade progressed, as you guys saw this morning, I showed you like, I, it just doesn't have it. I need to get out of this trade, right? So in fact, for those of you that hopped in late, I do want to cover this trade again because this one was a loser for me this morning. And fortunately, we stopped it before the bleeding could get really bad, right? Like instead, we put a Band-Aid on a wound that I lost some blood on, but this could have been like a mortal wound. Like this could have been pretty bad, but we got out. Right. So let's talk about the whys behind this trade setup. So this morning, like I said, I got alerted around 6:30. My phone was going off that so many different currency pairs were hitting supply demand areas. And again, it was due to CPI. And with a little context too, again, I do want you guys to be a little more cautious trading supply and demand when it is a news event. If it's normal price action, definitely maybe put a little more on that trade, like get more excited. If everything looks good and there's not a lot of news driving that market, then yeah, definitely go in a little harder. But this pair really was affected by the CPI data this morning. I think it's mostly the yen that was affected by it. The yen has been largely tied. Let me actually talk about that for a second. The yen has been largely tied to what's been happening to the dollar recently. Let me ask you this question, and I'm sure you can answer it in your head, but who's the largest owner? What country is the largest owner of US Treasuries outside of America? Well, the Japan is, right? Bigger than China, bigger than France, bigger than England. Japan has the most US Treasuries. And so whatever happens to our interest rates, whatever happens to our bonds that we sell off, not corporate, but not necessarily corporate, but like the government treasuries that we sell off to other countries, Japan is the largest owner of them. It's still, they used to be like 10 years ago, and even before the great financial crisis, Japan like was huge. Like it was a very large percentage. I can't remember what it is now. I think it may even be less than 10%. I need to look up. Maybe you guys know the numbers on that. But nowadays, it changed after 2008. They came up with this idea called quantitative easing, which didn't exist before 2008, where they came up with this idea where they could literally, like the Fed could literally issue bonds and then they could like buy them. So anyway, like our own government is the biggest holder of its own debt, which is kind of a weird concept to think about. But um, whereas before we could sell debt to people's IRAs, we could put our treasuries inside people's 401ks and pension plans and things like that, and people still have them. You probably own some, and whether you knew it or not, you've got some somewhere along the lines. You own some, um, but there's just not enough people to and enough buyers to buy that debt after 2008. Um, so we've been buying our own debt essentially. And we found a unique way to put it on the balance sheet and figure anyway, I better not go into that. But yeah, so long story short, Japan is very affected by what happens here. And so that's why you've seen a lot of yen pairs. Every yen pair, franc yen, CAD yen, pound yen, euro yen, everything with the yen has just been utterly like it's just been crazy. And it's all because of that relationship. So anyway, let's talk about this trade specifically. Let's talk about the technicals here. So I drew out some areas last night on this pair that I was really excited about. Let's talk about some of those areas. Before you can draw those areas out, you have to identify structure, right? Again, that's the routine. So you can see that that's a pretty solid structure level right there. Nice resistance. I don't know if you can go back and see more, but nonetheless, it's still a structure level. And then also this is right here. Like this is a pretty solid structure level right there. So, you've got this as resistance, and then this right here, you've got this as resistance, that as support, and that as support right there. So this is kind of a structure. I mean, it's not the best one you've ever seen, but it's still structure, right? So what caused the market to break out of these areas? Well, whatever happened here caused the market to break out of this area. Whatever happened here caused the market to break out of this area. So I felt like these two boxes were pretty solid areas, right? Like you have this and you had this. And so this morning, I got notified that the market had come in and tapped into both of these. And pretty quickly, the first tap in, like the market came into here and immediately pulled up. So like if you were there quickly, if you were there to get into the initial trade, there was actually quite a bit of money to be made in the first like 2 or 3 minutes, like with those supply demands. In fact, go look at a 1 minute chart. That other that other demand zones disappeared, but you can see it tapped into here on a 1 minute. And then, yeah, if within the next 5 to 10 minutes, there was a truckload of money to be made. But you'd have to be that nimble and that quick to be able to make that work. So these supply demand zone, this demand area was really good on the news event for the first 10, 15 minutes. But after that, the market's like, okay, we've tapped into it and we've got fundamentals here saying we need to push lower. So it's like, okay, we've tapped into it, game over, let's keep going down. And then for a while, this market actually, I was trading this morning before our webinar today. Like for a while, this market actually was forming some support and consolidation right in the demand zone. And that's actually part of the problem. And I talked about that, and I'll reemphasize it again, but this market found some comfort. It found home inside of demand. And again, ask yourself the question, why is that a bad thing or a good thing? And it is a bad thing if you're looking for reversals. What you want, guys, is when markets come and hit demand or supply, you want them to do this. You want them to bounce off of those zones and just reject. Okay. If the market comes back down and hangs out and makes a home inside those boxes, it means the market's not rejecting those areas. It's a bad sign. Okay. And so I saw that. You can go back and look at the recording of this. And I was down a little bit on those trades, not a ton, but I did have several buys kind of scattered. I had, buys in here, maybe some up here. but I had kind of a little position, bought up. And I did feel like this was a good area. And it technically, under normal conditions, was a phenomenal area. Under normal conditions, this was not normal this morning. And that's why we have to talk about this. I have to teach you guys this kind of thing, because these are the anomalies that you have to deal with. Because most of the time, 90% of the time, the market's just going to move smoothly. It's going to move in between supply demand zones easily with no problems. But that 10% of the time, you can lose a lot of money, and we do need to talk about that, right? And how to handle those types of situations. Anyway, so I was buying here, and then so you had a couple of things going on here. Let me delete all this. So we know that we're in a demand area, which is good, but it was hanging out, so that's bad, right? And then the other thing that we had was these huge wicks. Like we had wicks up here, wicks up here, wicks up here. We did have some small wicks down here, but they're not nearly as big, right? Like, so there's a tug of war going on, but it seems like the bears have a little bit more of an advantage of the bulls. You got those huge wicks. That's a sign. That's telling you that the market's not accepting those prices up there. Okay. And then the other signs that you can be looking for are we making newer highs? Are the highs becoming higher? Are the lows becoming higher as well? Or vice versa? Are the lows becoming lower? And are the highs going lower as well? And obviously, look at this. Not only do you have wicks, not only do you have really tall wicks on the top side, but each wick is subsequently lower than the previous wick, right? Really bad sign if you're a bull. Terrible sign. Terrible, terrible. And so I ate those trades. Like I ate them before this happened, right? Like before this right here. And I'm so glad I did, because how are you going to recover from that? Like, how do you know where in the world is the market going to help you next? I guess you'd have to go all the way down to here to find the next demand zone where you'll get some help. Like I think the market actually tapped into this one just barely after that big move down. This is a demand zone right here. Let's see, did the market tap into this? Yeah, it did right there. So it tapped into this one, and that's where you're going to get your next help. But look, it's still struggling. Like, look at it. It's not even decisively going up even from this level just yet. I mean, who knows? Maybe in the next hour, it'll come back up to here. It could. But can you imagine the drawdown you'd have to bear in order to get back up to that? That's a huge drawdown. And we deal with drawdowns like every day. Every time you take a trade, you're in a drawdown for a split second, at least. Like it happens. But this just seems a little too extreme to handle, right? So one of the things that I'm trying to do more of is when I'm taking these types of trades, I want to use this app that I have. It's, by the way, if you guys want it, it's called FX Alerts. I just got it on the iOS store. It's a little blue app with a little red ball on a, I don't know. I don't know if you guys can see it right there. I don't know if I can get it to, it's the one at the top in the middle. It's a little blue app with a little, yeah, there it is right there. So so what I'm doing is I'm just going in to set alerts whenever the market taps into a supply demand zone, and then I get the chance to evaluate it before I just go in and go hard. Okay. And so that's kind of how I'm choosing to trade these a little bit more, rather than just, oh, place a limit order, good, go, place a limit order, good, go, which is, we've done very well with those, but I think it's nice to be able to have a chance to see if you want to do it. Maybe use the limit order as long as you've done your due diligence to make sure there's no news associated with your pair. It's kind of a tough thing though, like today, this pound yen, obviously not related directly to the US dollar, but because of that unique relationship to the yen and the US dollar and the treasuries and interest rates and so on. So yeah, I mean, because of that, you'd have to know that. You'd have to be aware of those types of things like, oh, hey, the Japanese yen and the Japanese government is highly involved in the US government. Like out of any other country in the world, if there's any country that would be affected by the good and bad news of the United States, it's probably Japan, right? You can pick any country and it's going to be Japan, right? They just have way too much invested in our country, right? So more than any other country out there. So, okay. So anyway, let's go back to look at the euro pound. We're about ready to probably call it a day, since I'm just happy that we made our money on that. Looks like it hasn't wanted to come up to here yet. That's fine. I just wasn't quite willing to sell at this level. I just didn't feel like I didn't feel like this was a solid enough demand or supply area. And it looks like it actually went over it just barely. Yeah, just barely. I guess it's kind of including this one right here. Yeah. And that's fine. I just didn't want to jump into that one. I was just happy with what we did. But this is good. Let me go ahead and plot these trades so you guys can see it. And for those of you watching the recording of this, so this is the trade we took earlier for the banker's close today. There it is. So it happened so quick. These are all the trades we took right here. Move these all the way. Yep, there it is. Look, 7 different trades. And the market's basically come back to where we've stopped out, or we've taken most of our profits. But yeah, it was just a quick little trade. And again, the reason why I like this one was it just basically tapped into an area that historically this area has just been a massive amount of demand. There was no news associated with this pair. When the CPI was released right here, this pair was not affected as much as others, which was also another thing to me that was really comforting about taking this trade. And so that's why I felt comfortable going with the buy on that one. And I would be willing to sell on this guy if it came up to here. Absolutely. Absolutely. If it came up to here, I'd sell. All right, guys. Well, I think that's probably about it for today. I'll look for some more trades this afternoon, tonight, see if we can find another trade like the Aussie Kiwi in the Asian session, Tokyo session, that will have a setup associated with, that will move more in the Asian session. And again, it needs to have a significant supplier demand zone that we're hitting into. If we get something like that, I'll go ahead and post that and let you guys know in Telegram. But other than that, guys, appreciate your attendance. Thank you for coming, and we'll see you tomorrow.